Today is October 23rd, 2023, and this is your Monday market update. Looks like one last on-location report from Israel for this trip. We're booked to return to the U.S. early tomorrow. Contrary to what you may think, it's very hard to leave. I hope you will all join me in praying for success in the mission and peace soon. Let's keep some things normal and let's review last week's market action and preview what we'll see this week. Following a mixed week and a weekend with war, but not too much eco news, stocks gapped open on Monday. The news wires over the weekend were full, but without major escalation in the Middle East, markets were back to processing last week and looking ahead for signs in the inflation category. India's CPI came in lower than expected, and that supported the global disinflation thesis. Empire Manufacturing came in, and regardless of the headline, down a bit, the focus was on the prices index, the latest trigger, and that declined. The market liked that. So geopolitical news added some stability into this in that the U.S. Secretary of State Blinken as well as President Biden were set to visit the area to try to ease tensions. That news was well received. Treasury auctions, once again, like last week, were the catalyst to start some selling, and the 3- and 6-month auctions came in with higher yields, and we know what that means. The market recovered to close back near their highs. Dow almost up 1%, S&P up a bit more than 1%, the NASDAQ to close at 1.25%. Up 1.25%. Stocks gapped the other way on Tuesday, lower. On the scorecard, Biden heading to Israel was viewed as a stabilizer. As I mentioned before, I will hold off on any deep geopolitics here. It is not the place, and it is as hard as it is to stay focused on the economic impact. That is why you're here. Call me for the rest. On the chip side, new restrictions on China, and on the rate side, rates keep climbing. Think if the Biden item is true, the safety trade is less of a trade, and the demand is lower. Thus, the price goes lower and the yields climb higher. And that, of course, is a headwind on stocks. 10 a.m. brought housing data and comments from Fed head Barkin and Goldman head Solomon about the weakness of the economy. It's good news for the Fed. Retail sales were a bit higher than expected, and that is still surprising as the consumer stays strong. I spoke to someone this week, and we spoke about the fact that there is have and have not market. A lot of wealth is owned by some of the older demographic, and they're still spending. Makes me wonder what makes up this number. Yields did move higher later in the day, and the markets ended about the middle of the day's range. The Dow and S&P were virtually flat, and the NASDAQ down about 0.25%. Stocks gapped lower at the open again on Wednesday with recent Middle East developments, and although I said I'd stay away from too much on this, I watched a lot of this unfold and watched the press conference by the Israeli army about the source of the hospital explosion. As more information came to light, this was clearly not Israeli munitions, but that did not stop the Arab leaders in Jordan and Egypt to cancel their meeting with Biden. He was going there after his Israel stop. That was market-moving news. Again, not to ignore the horrible loss of life, but this was a destabilizing event. And as I mentioned from Tuesday's action, stabilized Middle East is what the market wants to see. 16-year highs on the U.S. Treasuries, new on yields in the U.S. Treasuries, new spending pending from the U.S. on aid to Israel and the region brought out the current state of the U.S. economy again. Don't forget, we're only 4 or 5 weeks away from the spending bill coming back. Fed heads were hawkish. Waller tested the waters with a one more hike comment. Markets closed, bracing for Powell's speech coming on Thursday. The Dow was down 1%, S&P down 1.33%. The NASDAQ was down almost 1.23%. Markets gapped slightly higher on the open on Thursday as news was out there to digest. Bad Tesla earnings, good Netflix earnings, Goldilocks eco data, and strong labor numbers. The 10-year yield over 4.95%, new cycle high. Then Powell's speech in New York. The initial reaction was positive. Yields fell. What did he say? He indicated, like what we've been hearing, markets have done some of the Fed's work for them, pulling yields higher, but then he added that it is possible that rates have not been high enough for long enough, and away the markets went. Reversal brought markets down to session lows. A short-lived rally after the speech was derailed by geopolitical tensions, including news that a U.S. warship intercepted some projectiles. Oil rallied. That was the textbook risk off due to Middle East unrest. That did not make it feel any better. The Dow was down another 0.75%, S&P down a bit more than that, the NASDAQ down almost 1%. Stocks opened lower on Friday, on pace to end the week in the red. In addition to gold hitting 3 months highs, the largest monthly expiration for an October on record, and of course geopolitical and global eco issues. There was some talk early from the Bank of America about the seasonal headwinds turning to market tailwinds. We'll see how that goes. The focus was still on the Treasury yields. Recall that we have had an inverted yield curve for a long time, since July of 2022. Quick reminder that negative yield curve news was all about when it happened, all about when it happens, a recession is coming. We'll revisit that another time. The spread is back to its lowest point since September 2022. This is as the 10-year yield broke above 5% for the first time since 2007, July of 2007. Just another quick reminder, if you can get 5% on your money for the next 10 years, and it'll be in U.S. Treasuries with the risk profile of those bonds, this may be part of the headwind of the market and maybe some of the source of opportunity, depending on how we look at it. We did get some Fed head speak from Mester, and she was pretty clear, in line with our one of the pillars of the market. She said that she expects that rates will not be raised much more from here, if at all. Holding pattern was another line, so also known as higher for longer. By the end of the day, the negative news outweighed any positive or neutral news, and the daily numbers looked like this. The Dow was down just under 1%, the S&P down 1.25%, the Nasdaq was down 1.5%. For the week, the Dow was off about 1.5%, the S&P down 2.5%, and the Nasdaq was down 3.25%. Overall, the fear is about the rates. As I mentioned, 10-year at the highest point since 2007, the yield is, and that brings mortgage rates to 8%, the highest since 2000. That wrapped up last week. Let's take a look at what to expect this week. As the heavyweights in eco data go, this is not the biggest week in quantity, though everything seems to be reported and watched now, but PCE and core PCE, the personal consumption expenditures, this is one of the favorites of the Fed. We'll also get the GDP number. We'll end the eco data on Friday with University of Michigan consumer sentiment. The weekly jobs numbers are in there too, quality over quantity. In the same light, only 3 hitters in the Fed headspace, but you'll get Powell himself on Wednesday, Waller Thursday, and Barr on Friday. There's going to be a blackout period soon. November 1st is the next meeting of the FOMC. We'll also get the heavyweights in earnings, so get ready for Microsoft, Meta, Amazon, and Alphabet. Others that will be watched closely are the credit card companies, MasterCard and Visa, Boeing, that's just a few. As markets open this week, they'll be watching a lot of different things, and there'll be a lot of noise, but a lot of important signals too. Watch oil over $90 per barrel and the 10-year over 5%. In my opinion, as I've told you, the key to the market is earnings. They drive valuations. Trading on valuations in the short term is hard. On the long term, earnings drive markets. Remember, these Monday videos are about the day-to-day and the deep-in-the-weeds action. The Friday videos will continue to focus on your goals, how we'll strive to reach them, regardless of the market action in the short term. This should be my last video from Israel for the trip. It's not easy to leave. Please continue to pray for success of the IDF and peace. Have a great week.